Hello, good afternoon. You're watching Closing Trades in ET now. I'm Anisha Jain with me, Snehi. And for now, the market is a bit wobbly at the moment. We had seen that level of almost 24,700 earlier, but from there, we have given up a bit. But having said that, Sneha, I think the texture of the market is such that it's the broader markets that have been consistently outperforming, and that's the case today as well.
Absolutely, Anisha, to sum it up, we are looking a little tepid right now, but nonetheless, we're in the green, so not a whole host of reasons to complain about today. Sensex also managing to just stay above that 81,500 mark. We have an hour of trade left. Let's see if they're able to, both Nifty and Sensex, if they're able to hold on to the greens. Let's take a look at what the broader markets are up to, because remember, today the Nifty small cap hit an all-time high just on the opening bell today, and the small cap has been outperforming the peer indices over the course of the last couple of trading sessions as well. Nifty small cap is up 0.3%. Let's also take a look at what Nifty mid cap is up to right now, because that's also in the green, not doing much, roughly 0.2% uptick coming in on Nifty mid cap as well. Sectorally, you have a very even distribution of sectors in the green and the red. You have auto that's doing well, top sectoral gainer, followed by FMCG, metal, pharma. All of these are in the green. However, what's not holding up pretty well, looking weak right now, is PSU banks under a whole host of pressure. 0.8% cut coming in, so lots of pressure seen over there. Media is in the red, 0.5% down. Energy, Nifty bank, IT and realty looking rather flat, but with a slight negative bias. So this is what the market is shaping up to be right now. We're looking flat on the Nifty, but nonetheless on the green, slightly just looking optimistically positive right now, Anisha.
Well, yes, but there are pockets which are actually doing okay. Case in point being railways. I mean, take a look at Titagar Wagons up 7%. IRFC is doing quite well. Ircon International is holding up quite well. We're talking about real estate being a bit tepid, but Raymond is the outperformer there. Yesterday, that stock was up 10%. Today, it continues to gain ground with that 4% move coming in. And PNC Infratech from the Infra pack is definitely something that deserves mention with that 14% surge. And in the last few minutes, even Torrent Power has managed to kind of eke out further gains for itself. So buoyancy when it comes to industrials, capex related names. Take a look at Torrent Power at the highest point of the trading session. But let's address some stocks and news before we welcome our technical experts. Avenue Supermarts is the stock that we have been tracking. Goldman Sachs cut its target from 4,000 bucks to almost 3,500 a piece. So that stock has been under pressure, and this is not the first one to do that. Just a couple of days ago, Kotak had talked about increasing competitive pressure. That's clearly ailing Avenue today. Bajaj Finance, on the other hand, came out with its FY29 guidance and the roadmap. Fairly buoyant today, almost a 2.5% gain coming in on Bajaj Finance. And BEML, an order win of almost 220 crores. So that stock too is in focus. But time now to welcome the technical experts on the show. Naresh Mirani as well as Kunal Bothra is always with us. Naresh, begin by, kind of discussing the texture of the market, especially when you're looking at the broader markets. Do you expect this kind of outperformance to continue, or it's time that the large caps will chug along now?
So in the correction also, we did not see a larger dip in small caps. Generally, when we look at a 10% downtake on the Nifty, small caps tend to correct 15-20%. That we did not see. On the way up also, small cap 100 is the first index to make a new all-time high. You have micro cap 250 as well as BSE small cap. This generally suggests outperformance should continue in the small cap space. It could only get selective going forward. And on the Nifty, the bias is still positive. We are consolidating in a tight range after that volatile day. So 24,300 to 24,800 is the band. If we sustain 24,800, we get into a momentum move towards 25,200. So for now, stock specific, post 24,800, it could be much more large caps.
Of you coming in on the market going ahead, and as well as what large caps and broader markets are expected to perform, how they're expected to shape up going ahead. But let's also now welcome on board Dhananjay Sinha, co-head of equities at Systematics Group. Dhananjay, thanks for taking the time out and joining us. Give us a sense of the moves that we're seeing when it comes to the entire consumption pack. FMCG has been in a bit of a jiffy over the last couple of trading sessions. It's been doing well one day, then it's been deep under pressure the other day. And you also have Avenue Supermarts that's been ailing away today. And especially after the commentary that came in from GCPL in the middle of the Q3. So tell us, what's your outlook going ahead in the entire consumption space? Do you believe this is a temporary blip that's being seen by the sector and better days are yet to come, or is that going to take some time?
So I think the consumption space has been reeling under multiple headwinds, largely in the context that companies such as Nestle and other even auto majors have been saying that there is a constraint as far as the income growth is concerned. So there's been a lot of talk about shrinking middle income, consumers, especially the urban side. So I think that that news has been there, and I think with the results that we saw in the last quarter, I think all those things were there, reflected in the volume growth and commentaries of various companies. I would say last quarter people also expected, or companies such as Dabur and all had actually said that there would be better rural growth and all first quarter or second quarter. People are expecting. I think there was a disappointment there. I think what people are looking at, after a very sharp correction that's been there, people are expecting a better second half, largely coming from the fact that there is a sort of optimistic view about farm sector performance and production of various crops in Kharif crop and sowing season for Rabi crop. So I think there is a sort of a positivity with respect to that. Also, that we have seen that there is some amount of positive wage growth, real wage growth that we have sort of estimated. It's very modest, but I would say it has turned a little positive at, let's say, about 1.5 to 2% in real terms. So it was languishing in the negative territory for a long time, or it was absolutely flat for the previous 10 odd months. So there is some amount of attraction that is there with what, and then people are sort of looking at this sector, this segment after the sharp correction. So I think management commentary is something which is very critical, and hence I think when GCPL made that statement about sort of margin pressure and all, is something that stock was actually saw a significant correction of almost like 9 to 10%. So I think, and with that, I think a lot of other companies in the consumer space also saw the beating. I would say that from there on, people are kind of trying to look at value there. Looking forward, I would say that there will be all these things that I've just said about the agriculture sector performance, and I think if you look at other government initiatives, there does seem to be some amount of spending that is now happening in the rural space with all the dole-outs that are happening from at the state level, and also that the credit policy, the last one, talked about increasing the limit for uncollateralized lending to the agriculture sector to 2 lakh crores, to 2 lakh rupees, sorry, 2 lakh rupees. So there does seem to be certain amount of policy focus out there. So from the tough situation that consumer companies have actually seen, there can be some revival as we can look at going forward. And I think the other thing to really look at is the two-wheeler volume growth, which has been positive. If you compare it against the passenger vehicles or commercial vehicle, growing at something like 14-15%, and tractor volume growth also seem to be somewhat positive. So I think there does seem to be some activities, especially arising from government initiative and also the agri sector performance. But I think this is going to be a very shallow recovery because the urban sector is actually slowing, and there is a certain amount of repatriation of money that happens from urban to rural. That might actually be the weakening factor for the consumption space in general in the urban areas. And to some extent, there will be a spillover on the rural as well. So I think that's the broad takeaway we have. It's kind of, to summarize, somewhat positive at the margin for the rural place.
Complicated though to kind of figure out which way it's gonna go. Maybe it's just better to stay out for the interim and then take a fresh look at the segment and the sector. But in the meantime, Kunal, talk to us about some of these heavyweights, SBI and Reliance. They're giving up today. What's the sense on the charts?
Nothing major, in terms of damage to these large cap names. I think it's more of a roller coaster ride, which we're seeing for many of these stocks. One day up, one day down. I think yesterday we had the PSU banking index, which was one of the better performing indices, and today it's the time where many of these other sectors like railways and then you have metal stocks, etc., which are doing pretty well for themselves. So I think it's more of a one day up, one day down for many of these stocks, even from the large cap names. Now, the concern out of the two names which you mentioned is on Reliance Industries, because even after this 70-80 point bounce, which we've seen from 1230 levels towards 1300, 1320 mark, for Reliance Industries. It's not been a very strong or a volume-backed move for the stock, and I think that's the concern, because typically when the markets are getting into a phase of revival, you would want the best of the large cap names, and especially the heavy-weighted large cap stocks. They tend to participate, in a much more stronger correlated manner. But if we don't see that happening, which means that the stock is due for a further leg of consolidation or correction. So my sense is that Reliance Industries could probably consolidate from here on, and if the stock comes back to 1300, 1320 mark, that could actually be a time to lighten out some trading positions.
Kunal, you're spotting some trouble ahead on the charts for Reliance. Nuresh, coming to you now. Since we're talking about Nifty heavyweights, let's also talk about Bajaj Finance on the charts, because fundamentally lots has been happening with this stock over the last couple of days. What is the chart for this stock looking like going ahead, and do you believe that this slight bit of positivity that the stock has been seeing now is going to sustain going ahead as well?
So we've seen the uptick today post the analyst meet and various updates from different brokers. But if we look at the chart for the last almost 3 years, it has continued to see multiple times 8,000, 8,200, 7,800. That point of resistance become a problem zone multiple times. It's almost like what has happened with HDFC Bank for almost 3 years. Same is the case with Bajaj Finance. As of now, we are at the lower end and now coming back to the midpoint. So there is a lot more time we need to knock out those resistances and then maybe look at it. So for now, I would expect it to be range bound. Closer to 7,500, 7,800 could be a target for the current move. And post that again, the stock consolidate.
Taken, so a bit of a up move is pending, and then perhaps it consolidates. Wanted to get a better sense from you, Dhananjay, as far as the infrastructure sector is concerned. It went out of flavor in between, while industrials the likes of Siemens, ABB, L&T were doing well. Pure play EPC, road companies, the IRBs, the PNC, and Ashoka Bilkon of the world fell out of favor. With the budget impending, do you anticipate a bit of a revival in some of these names?
I think this is a hope trade, especially there has been commentary from the government and government sources in the media that there can be a sort of a revival in government capex, wherein we have seen in the first half of this year, both for the central government, in fact, more than I think the data till October is telling us that there has been a contraction in capital outlay by the state government and central government if you put together. I think that people are talking up the revival, especially in the context that the second quarter GDP numbers were bad, and people cited cutback in government spending for the slowdown, and the expectation that has been built is that the government would come back and start spending, and the revival in capex would happen. Our view is that it's going to be an underperformance in a significant way in the full. If you look at the full year estimate, if you consider the overall budget capital spending of about 11 lakh something that they have actually budgeted, there can be a considerable underperformance there. And going forward, also, I would say that governments will start to look more for revenue expenditure, more spending on the social themes. And rural themes rather than on capex, and then we are seeing a certain deceleration in the tax revenue coming from income tax, and corporate tax has been contracting, and deceleration is there for indirect tax as well. So I think the fiscal scenario is going to be fairly challenging, and as a result of that, the trade-off between looking at livelihood issues of people and addressing the income situation versus the capex that the government had been doing, I think that is going to be fairly stark. And I think the trade-off would imply that there will be lesser spending on infrastructure by government. So I think I would be wary about getting into such names or such themes from a medium to long, let's say 2-3 years perspective. So I would, my preference is definitely, towards consumption themes and rural themes rather than the infrastructure heavy sectors, including construction and related manufacturing sector.
Okay, so that's Dhananjay's take coming in on the entire infra basket of stocks, sounding slightly cautious going ahead. But on that note, we'll slip into a very short break on closing trades and keep it going with the market discussion just on the other side of this break. You stay tuned, we'll be right back.
Welcome back. Well, let's take a look at the Nifty, whether there is any bit of action, because it's been fairly quiet throughout the trading session and it continues to be range bound. Not much of an action. 24,630 at the index level. Bajaj Finance has been doing well. There's a bit of a traction on Britannia today. So clearly, distinction being made within the FMCG pack. Shriram Finance, BPCL, these are some of the other names. While on the losing side, Adani Ports, JSW Steel, HCL Tech and SBI. These are some of the names which are in the red at the moment. But cement as a space has been fairly active in the last couple of weeks, because there have been those notes and channel checks doing round that there has been apparently 10 to 30 rupees kind of price hikes that the cement companies have managed to take in the month of December so far. But of course, the big question is on sustainability of those gains. This is something that CLSA also pointed out, and we'll get Ashesha to join us shortly to talk to us about what exactly are the questions that CLSA is talking about, and what do they make of the entire sector analysis. In fact, she's right there with us. Ashesha, tell us about the cement pack and what CLSA has to say on the same.
Well, absolutely. A whole host of cement stocks are in focus today on the back of the CLSA report which has come in. CLSA highlights that the cement prices have risen by about 10 to 30 rupees per bag in the month of December so far, which is a significant improvement versus what we had seen in the last few months. Remember, price growth has been muted for the last 1 or 2 years, and cement prices have attempted several price hikes, but they were not sustainable and had to be rolled back. So any increase in prices is considered as a big positive for the cement sector. CLSA also says that volume growth, although it was muted in the second quarter on account of monsoon, on account of lower capex by the government, but it has seen significant improvement in the second half of November this year, and it is expected to continue going forward. They are very positive when it comes to volume growth outlook. They believe volume growth is expected to improve in the second half of FY25 and will continue in FY26 as well. They remain selective within the sector. They prefer Ultratech cement, but all in all, their view continues to remain very positive. They say consensus estimates imply 4% increase in cement prices in the second half of the year, and they are assuming sharp recovery as far as volumes are concerned. And remember, most of these cement companies have been focusing on optimizing their cost, so that will be an added advantage. But yes, cement prices have risen, which is a big positive. CLSA has come out with a report, and hence all of these stocks are buzzing in trade today.
Okay, Shesha, thanks for taking us through that. So CLSA's note on the cement space looking rather upbeat, and they're particularly positive on Ultratech when it comes to this space. Anandra, I wanted to get your view in quickly. What's your view on the entire cement space right now? Do you believe that the space has some more upside to it going ahead? And CLSA is preferring Ultratech. How would you play this space?
So I think there can be selective opportunities for sure. I think it depends on the market power that each of these companies face in the regions. But I think in terms of the macro picture, I'm not very positive about it. The kind of volume growth that we've seen in the cement space over the last, let's say, 5-6 years has been in the region of 8% on average, because the government had been spending a lot on construction, especially the highways and all. The last budget was about 2,75,000 for highways, including other spending on repair works and modernization, etc. Little over 3.5 lakhs. So I think there has been a stagnancy out there. We think that the volume growth can actually come down. The new normal that we see is about 4% odd. From time to time, companies have actually taken price hikes. I think we have seen this over the last couple of years. I mean, last year also, companies had taken significant price hike around the winter time, roughly about 12 months back. But they had to really wind that back because of the lack of orders and the inability to sustain the rise. So essentially, companies try to do a price hike after the monsoon season, hoping that it sustains and it sticks. If it doesn't, they actually wind it down. So I would say that such kind of sentiments do occur sporadically. But I think structurally, I would say that we think that the ability of the government to actually do more capex on roads, etc., will be far more limited, especially in the context that we find that the commercial vehicle volume has actually been shrinking. And over the last 12 years, I would say that commercial vehicle MHCV volumes have roughly been stagnant, growing at less than 0.5%. So I would say the utilization of such spending and the revenue that you get through tolls, etc., is going to be a question, especially for HAM projects, the burden is going to come, shortfall in revenues would come on the state government. So I think there will be sort of a much lesser imperative for the government, both for the state government and the central government, to actually go ahead with aggressive spending on infrastructure and particularly roads.
Okay, Dhananjay, we'll have to let you go on that note because we're gearing up to hear the new RBI governor who has a press conference lined up at 3 p.m. So we are watching out for that. Let's do let's do one thing. Let's take a short break while we can, and we'll come back and discuss the market technicals with our expert on the other side. Welcome back. We're just waiting by for the RBI governor to speak, but for now the market is fairly buoyant just ahead of that. Let me quickly get out some of the BTST trades and the closing trades out of the way then. Kunal, your closing trade idea at the moment?
So there'll be a buy on Geofinance. Very interesting chart. After almost 3 or 4 days of price correction, the stock has made a very strong comeback and now hitting the resistance points of 340, crossing about those levels. So looks attractive, and would look out for targets in the range of at least 360, 365 over the very near term.
Okay, so Geo Financial Services clearly looking good on the chart. Maybe not Reliance, but at least GeoFS is at the highest point of the day. Naresh, what's your closing trade idea?
We are buying Apollo Hospitals, the stock very close to making new all-time highs. So expecting it to go towards those levels. A stop loss at 7,300, target price of 7,400 plus.
Okay, point taken. So those are the recommendations coming in from our technical experts. But Amnish Agarwal also joins us on the show to talk to us about the fundamentals right now. Overall for the market, if you're looking at the sector-wise breakup today, it's PSU banks which are on the back foot. But having said that, railway stocks are doing quite well. Defense has managed to come back. In fact, other industrials and public sector entities have been doing well. Amnish, does that make you believe that perhaps the dip that we saw in the public sector entities, whether defense, whether railways and all of that, it's behind us and now the buying would resume?
Okay, hi. See, one can't put all the PSUs in one basket per se, because what has happened is when it comes to railways, when it comes to defense and some of the other industries which are related to capital goods, engineering, EPC, construction, etc. So what is happening is in the first 6 months of this year, there were no order flows which came in 1Q. In 2Q, it picked up, but now we are in the last 4 months of the year, and the government had significantly, you can say the order inflows and spending has been very, very limited in the first 6 months of the year. Now, as we move towards the, you can say, close of the year, I think you will see more and more order announcements which will happen across these segments. And I think that is what is reflecting in the strong outperformance of many of these sectors. So as the order announcements are likely to continue, say for next couple of months, I think the interest levels will continue to be high. But having said that, I think one needs to be very cognizant of the fact that any sharp run-up in the stock prices and any run-up which is beyond the fundamentals, I think one should be very, very particular about that, because as we have seen in the past that during market correction, the stock can even show negative returns.
Coming in on this entire PSU basket of stocks, Amnish, hold that thought while I'm going to reconnect with Kunal and Naresh and get the BTST ideas out of the way. Naresh, coming to you first, what are your BTST picks for today?
So first would be a buy on Apollo Hospitals. The stock is closer to a new all-time high. Stop loss at 7,300, target price of 7,400. Second is a buy on Tata Communications. The stock is crossing the last 20-30 days high. Stop loss at 1810, target price of 1880.
Hospitals and Tata Com looking good to Naresh on the BTST basis. Kunal, what about you?
So that will be one Bajaj Finance, for a short-term target of 7,400, especially after today's breakout of its 200 moving average. Stop loss to be kept at 7,000. And trend is something which has started to come back into a trending mode after almost 3 or 4 days of consistent price correction. So looks attractive for a BTST target of 7,200. Stop loss at 6,850.
Okay, so those are the BTSC trades coming in from our technical experts. In the meantime, take a look at Kalpataru Power inching higher right now. Max Healthcare is doing quite well. KIMS, or that Krishna Institute, is also doing quite well. In the last few minutes, it's managed to perk up. But on the losing side, what's coming under pressure? Well, PNC Infratech is giving up slightly. Torrent Power, ICICI Lombard, these are some of the other names. But Amnish, if I had to get your take regarding pharma and some of the CDMO companies, because they were pinning their hopes on the Biosecure Act, that seems to have got delayed, if not off the shelf completely. What happens to the fortune of some of these CDMO players then?
You see, now US, we are going to have a new, you can say, president in place from 20th of January. Now, I think if the bill doesn't get through during the current government, then I think what form, shape it will come or it will not come, that becomes uncertain. And due to this very particular reason, all the CDMO and all the many of these API companies, so they have been on the receiving end. So I believe that now the kind of leg up which had come in many of these stocks, that is the reason for that no longer exists. I think they might, you can say, correct to a certain level, and then I think it depends on what happens on that front in the medium term. So to that extent, I think there could be some uncertainty, and for the time being, I think again that sort of a bounce back doesn't look likely.
Okay, so that's the take coming in on the entire pharma space. But let's also go across and listen into what Vishal Manchanda had to say about this entire upheaval or the impact from the exclusion of this act from the US defense bill and how that's going to pan out for our companies, our pharma companies back home.
Multiples, I would say, are a bit extended and it may not. So they partially built in the upside that was expected to come from the Biosecure Act. So I think that with this uncertainty, we should expect the multiples to contract a bit from where they have been. This sector broadly is witnessing pricing pressure, and it has been so for the last few years. And I don't think this is going to improve. The pricing challenge would remain. Volumes is the only way to grow. And these companies, but we are seeing intense competition. The competition is getting more intensified here. So I think it can still grow, say, high single digit, low double digit, but we shouldn't expect any higher number here on the diagnostic growth front. GLP-1 is one area where Indian companies are waiting for contract manufacturing opportunities. So I think Divi's, Suven, Piramal, and Newland also is one more name that I would like to add to the list that is expected to do well in this space.
So that's a take on pharma, but the banking index is coming under pressure right now. ICICI Bank is down, HDFC Bank is putting some pressure, SBI too is down in the trading session, has been for most part. In fact, PSU banks have been weak, but it's ICICI Bank and HDFC Bank which are also getting a bit undone, and that's putting pressure on the frontline index as far as Nifty Bank is concerned. But Amnish, if I had to ask you about the disruption which is underway when it comes to the FMCG sector, just now we're getting the update from Swiggy that they're likely to launch One Black, which is their, premium membership of sorts. Yesterday we heard about Amazon getting into the quick commerce category. 15-minute delivery is what they're targeting. What happens to the incumbents, the likes of Avenue Supermarts?
You see, already we are having 4 players. That is your Swiggy, Instamart is there, Blinkit is there, your Zepto is there, and BB Now is there. Now, Flipkart Minutes and Amazon also come into the trade. Now, it depends that how much of incremental players entry will give incremental volumes or kick to the consumer to buy more. Because whether these are 2 players or whether these are 4 players, unless and until you differentiate the product, you offer something new to the customer which other platforms are not doing, then you will not be able to generate volumes. That is one. Secondly, otherwise, what is going to happen that all these 4 players or 6 players now, they are going to slug out very badly in order to garner the eyeballs, in order to get the consumer orders. So it might result in, you can say, more discounting, more offers like, for example, 3-month membership, 6-month membership. And I think the entire industry dynamics is going to change on that side. Now, when it comes to DMart, in particular, I think, you see, if you have to look at, say, the mix of the company. For example, DMart is, say, roughly around 23% or comes from, say, your apparel and general merchandise. One part is your FMCG. So not the entire, these your quick commerce platforms, they won't be able to capture the entire monthly requirement of the consumers. So far, if you look at the average ticket size, it is roughly around 500, 600 rupees. When it comes to DMart, the average ticket size is more than 1500 rupees. So the consumer affinity for both the segments is there. They will continue to coexist. But having said that, the incremental hit on demand will depend upon how much of incremental orders or how much of AOV these guys can push beyond apparel, beyond some of the durable segments, electronics, etc., which they are going to, you can say, enter. So if they are able to move that AOV, if they are able to garner more sales volume, which might not be that easy, because say if you are you can say giving higher value orders for your grocery, so that is I think yet to be fully tested with some of these your quick commerce companies. So I think definitely the competition is going to increase, and its impact can be a little bit on Avenue Supermart also. But I think particularly 3Q numbers will be key to watch out for, because first time it was, you can say, called out for in the 2Q numbers. So let us see what happens in the 3Q as far as the Avenue Supermart is concerned.
So looks like Avenue Supermart actually has its work cut out for itself and needs to pull up their socks now, because lots to do in terms of the rising competition now that you have more players heating up the quick commerce space. But Kunal, talking about competition, I want to get your view on the charts of Swiggy, because other than everything that's been happening on the fundamental side today, the equity lock-in also has ended for Swiggy. Approximately 3% equity is out in the open market now. Tell us what sense are you making of this stock on the charts, because every time in the last couple of trading sessions we've seen this stock move, it's always either been like it's either 4% higher today, it's 3% lower. It's never been a 0.5% move. It's not something that moves very lightly. So tell us, what's the take coming in on the charts, and what are the levels that you are also spotting for Swiggy?
Yeah, that generally happens when there is a lot of expectations, built up into the stock, and of course, that leads to trading volume, trading activity, or much heightened trading activity into the stock price. The chart history for Swiggy is a lot more limited, but then whatever the price history suggests over the last 3 weeks of the data, it indicates that from those 400 levels, the stock had moved into a very calibrated move towards the 550, 560 mark, which I think it tested couple of trading sessions back. Today could be a day where the stock is taking a bit of a gap down, and then from those gap down levels, the stock has maintained the downward bias, even though it's been trading into a range. However, I think it looks like that the stock is still into a firm footing on the upside. We've not seen any major selling on the back of higher volumes for Swiggy post the listing. I think that's one of the major reasons why I would believe that this trend should continue. So my belief is that hopefully in the next 1 or 2 days, the selling should be absorbed and the stock may come back into retesting its previous swing high.
Yeah, and then there is that trigger of the inflows which are expected on account of some rebalancing as well. So that should play out next week. But public sector banks, Naresh, have been under pressure, whether it's an Indian bank, whether it's a PNB, SBI itself, Canara, Bank of India, all of those names. Anything that you would want to buy at lower levels? Naresh, the question is
As
for
well.
you.
Yeah. So looking at the smaller names, Bank of India looks interesting. The stock has corrected from 155 all the way down to 100, and now making a comeback. So this name looks interesting. Similarly, a Punjab National Bank saw a very sharp correction from 140 odd levels all the way down to 95, and now starting to make a base. So the smaller PSU banks look interesting because they're still down 30% from the top, and a base formation is already done on the downside. So I would expect a slow and steady recovery across the whole small cap PSU banking space. On the other hand, the largest one, SBI, continues to sustain above the 850, 860 breakout. All-time highs are around 900 odd levels, which has been tested a couple of times. Once that crosses, it gets into a momentum. So for now, the risk reward is well placed for the smaller PSU banks.
Point taken. Amnish, what about the IT pack? I mean, Nifty IT has been hitting record highs in an otherwise weak market. Today, it's scaled a fresh high. Which stocks would you recommend? Because till last year, the idea was that being niche names, being those mid caps which are outperforming, but then came the overhang of the auto slowdown or auto spend slowdown in Europe. Now, what would you recommend? Stay with the large caps which are better equipped to deal with the Gen AI disruption, or still stay with the niche names which are likely to deliver at least a double-digit growth?
You see, there is a March slowdown which is there in Europe. Whether these are ER&D companies or auto companies, so they are feeling say some heat over there, and that is reflected in the numbers of whether you look at the likes of say even your KPIT is there, Tata Elxsi is there, even LTTS didn't have that great a number, but broadly people are of the view that the spending in the US markets or in the some of the developed markets that should pick up. And some of these large players, they seem to be better placed to, you can say, navigate this. So that is why you see in the long term, some of these ER&D companies or mid caps are also good. But I think somehow, if you look at, say, in terms of multiples also, if you look at, say, 2 weeks back, TCS was actually trading at a discount to where some of these other large caps are also there. So I think at the current juncture, for example, if you are looking at growth and LTI 90 looks good, so I think it will be more like an entire pack moving forward because some of these large cap stocks, for example, you look at, say, Infi or TCS. So are they on very expensive valuations or whether they were there 2 years back? The answer is no. But are they very cheap at, say, 15, 16, 18 times? That also doesn't seem to be the case. So I think a lot depends upon how the growth momentum pans out. But I think there's a lot of expectations which are built into that what happens more in the developed markets post, say, once Trump assumes the chair next month. So I think that is getting reflected. And also the fact that the domestic growth scenario looks quite mixed as of now in many of these sectors. So IT looks to be more safer and more defensive in comparison to some of the other segments.
So that's the view coming in on IT. But Kunal, we've seen a brokerage note coming in the morning that has a sell rating on Wipro with a target price of 290 rupees per share. Do you concur with that view coming in? Does Wipro deserve this sell call on the charts? And is the 290 level also the level that you are spotting for Wipro, or is there something else that you are penciling in for this chart at least?
I would be bullish on Wipro. In fact, from even from current levels. In fact, over the last few weeks, I've been highlighting this as a potential swing breakout trade. The stock has done reasonably well in the last 2-3 weeks, moved up from 280, 85 levels to now 310, where it's trading right now. And that too, I think, at a point where, if I'm not wrong, this is the 6th or the 7th consecutive month of price uptrend for Wipro, and it's been moving in a very slow, gradual, calibrated manner in terms of closing basis. Yeah, within the month, the stock sees a lot of volatility. But then till the end of the month, if the stock closes on a positive note, that generally is an indication that the carry forward momentum is on the bullish side for stock like Wipro. So my sense is that the stock should continue to move up higher. My expectation is that the stock should move now towards the range of at least 330, 335 over the very near term.
Okay, point taken. So that's the view coming in as far as some of these IT names are concerned. My colleague Asta just got the opportunity to chat with the Britannia Industries CEO. So some of the important headlines coming in there suggest that they're going to go aggressive and absorb the prices by 3% to avoid the pressure on consumers. So they're not looking at price, passing on the price pressures to the consumer directly might hurt the margins in the interim, but they're willing to do that because, of course, consumption has taken a hit. Larger packs will witness higher prices. They're expecting that they're open to partnerships for innovations, and they're doing a lot in order to reach out to the consumers to make sure that premiumization trends picks up. But for now, given the fact that prices of flour, cocoa, palm oil, they have all risen, they are likely to perhaps take the hit on their margins and not completely pass it on to the consumers. And they're taking strong steps to ensure that the rural demand is met, and they're, of course, investing in the digital side of the business. So that's the interesting commentary coming in, and we'll try and kind of play out a soundbite for that, of that interaction to you very, very shortly. But that seems to be the problem, right, Amnish? On one hand, consumption is not picking up, as in the demand is not picking up. And on the other hand, the prices of the raw materials continue to be fairly volatile. Do you think 2025 will be marked by a margin compression for a lot of these FMCG companies, and not only the volume pressure that we saw in 2024?
Not something which was unexpected. Because if you look at, say, FY24 for the entire consumer pack, while the volumes were not good, we had lifetime high margins for, I would say, 80% of the companies. And this year, the expectation was at the beginning of the year that while the volumes will come back, the margins are not going to increase. And in some of these, I would say, input costs also, it is not that the inflation has come in a day. For example, you look at palm oil, the duty increase happened in the month of September. But the international prices, they have been slowly inching up from the last 6 months. Wheat prices have been inching up since June or July. Now, as far as your demand scenario is concerned, I think it is not only to do with the input cost, it is to do with the broader inflation in the economy. If you look at last month numbers, the food inflation was running at 10 to 11%. Now, once the food inflation is high, then the incremental demand generation in terms of volumes, that becomes very tough. And secondly, in this kind of an environment where the demand scenario is certain, the companies would obviously be very hesitant to pass on the input cost inflation. So I think if you look at say FY25, in FY25 now, the balance few months, I think the focus for most of the companies will be somehow to keep the volume growth intact or to sustain the volumes, whatever they are having, and slowly and steadily pass on the cost increase to the consumers in a very calibrated manner, so that in the next few months, if the inflation also softens a little bit on one hand, and then the consumer overall situation stabilizes, then they should be in a better position at least in the next year. But for the next couple of months, I think for majority of companies, we are not going to get any positive commentary or any positive surprises.
Point taken, but it's the man of the hour which is on the screen, Amnish, and that's Sanjay Malhotra, of course, the new RBI governor taking charge. He's getting decked up to speak at the first press conference as the RBI governor. He, of course, is going to be the 26th RBI governor. He has, of course, a long history to go by with respect to the, administrative service that he has done. He has, of course, the IIT Kanpur engineering degree to back him up. He has been studying public policy at Princeton. So he has, of course, enough backing to go by it, and the entire career wherein he's played part in the power sector, finance sector, as well as taxation, information technology and mining. He has played roles across various streams. He has, of course, a 33-year experience. He's been a career bureaucrat. We have seen that's been something that the government has been, favoring as far as the RBI governor position is concerned. They kept it close to the heart till the last minute. We were all wondering whether it's going to be an extension for RBI Governor Shaktikanta Das, the erstwhile governor that is, or is it going to be a fresh name? It is a fresh name indeed, with a lot of pedigree. Perhaps somebody who understands what exactly has been the government, what they have been thinking. He was, of course, the revenue secretary till yesterday. So I think he's just getting ready to start talking, and I think all eyes will be on what he has to say as to how he manages the balance of growth versus inflation, because, of course, we've managed to tame down the demon of inflation to a large extent, but in the last couple of months, it started coming back yet again. Growth has slowed down. So we are at a very important inflection point right now as far as economy is concerned. The expectation was that perhaps in February we'll see a rate cut. But do remember, there are going to be 5 or 6 new members as far as MPC is concerned in that meeting. So it will be the first for quite a few, including the RBI governor. So whether they're willing to take an action at that point of time, what their assessment is of the economy, what they have to make of course, Trump, 2.0 as well, because that's going to have an impact.
If you like this video, then like, share and subscribe to ET Now.